What's going on, everybody? You all have probably heard of the buy, close, sell, open strategy. This is a chart of buying market close and selling it at open the next day versus buying market open and selling it at close of the same day. The S&P actually makes most of its moves while the markets are closed. Today, we're going to utilize coded backtesting in order to look at this strategy, see if it does outperform, and see if we can optimize it even further using some simple moving averages and stuff. So hit like and subscribe while the intro plays if you're excited, and let's get into it.
In a world where money is all that matters, people look for any reason to profit. Which way is best? Welcome to the indicator trials.
I'm going to start this video off by gathering a baseline. Let's look at what you would be up doing the Warren Buffett just buy and hold strategy. This is since February of 1993. That's when SPY was created. That's actually when I was born. Shout out to me and SPY both being created in the same month. Anyway, if you had 100 shares of SPY since 1993, February 93, you were up $36,681 today. That's important. Let's get that baseline. So now we can look at, does the buy, close, sell, open strategy outperform that, or can we make it outperform that? So now I'm going to write the code in order to have the strategy buy the close of candle, sell the open of the next candle. I'm not going to bore you guys with the code. I'll just show you the results now. Alrighty, so this is, as you can see, it takes a trade every day, of course, but this is the outcome of buy, close, sell, open. It's actually only up $34,865, which is down $2,000 on the buy and hold. Let's also quickly talk about the advantages of both of these strategies and the disadvantages. What's the major advantage of buy and hold? What's the major advantage of you bought shares in 93 and you never sell them? No taxes, right? You're not being taxed. You're not locking in those gains, especially you're not locking them in within a year, so you're not getting short-term capital gains taxes. Even when you do lock them in eventually, you will get better taxes on them. Every single one of these trades would have short-term capital gains taxes on it. Now, what's the biggest upside to buy, close, sell high against buy and hold is that it's scalable, right? As you make money with this strategy, you're putting it into your account every day. It's actually coming back into your account. So if you're trading 100 shares of SPY and you make $5,000 in a month doing this, the next month you can then go trade 120 shares of SPY instead, and it's scalable. I do not have this doing that. I'm actually not 100% sure how to make Thinkorswim do it, if it's even possible. But that is a way that if you were scaling into this, I'm sure I can promise you this would be outperforming buy and hold. Now, buy and hold does have some intrinsic scalability, because if you had 100 shares at $40 in 93, you now have 100 shares at $410. It definitely has like intrinsic scalability, but it's still just those 100 shares. Whereas if you're doing this strategy since 93, it's up 1,000%. So you're probably up to you could be up to 1,000 shares at 410 now if with trading this strategy with the buy and hold. So something else to keep in mind is that this is not scaled yet, but we have figured out that buy and hold actually does not, once again, without scaling, buy, close, sell, open does not outperform just buy and hold. But let's see, I almost guarantee you I can make this better. If I implement an SMA, I'm going to try to implement the 200 simple moving average and only buy if we're above that. So it probably wouldn't have taken any longs here. It wouldn't have taken any longs during the COVID dip. It wouldn't have taken any longs during this dip. Let's implement that. Once again, not going to bore you with the code, just show you the results, but I'll be back in a second. Alrighty, so here we go. Now you can see that the strategy buy, close, sell, open is only entering when SPY is above the 200 SMA, which is of course signified here by the cyan line on the chart, the 200 simple moving average. And you can see, or maybe you can't, can I make this a little bit bigger so the number pops up? You can see now we are up $52,700. So once again, without scaling, without the money that you're putting back into your account, utilizing that to buy more shares, this actually now relatively greatly outperforms buy and hold. Does it outperform it over a sequence of being short-term gains taxed every year? You have to pay, short-term gains tax depends on your tax bracket, but are around 33%. You're going to give up a third of these gains every year. Does it outperform the buy and hold? Probably not. Once again, I would have to look at it more in detail with scaling, but also, as you scale more and make more money, you also owe more taxes. But of course, the profit is still larger than the taxes. They're not taking all your money. But what's another upside to this strategy, to the buy, close, sell, open strategy versus buy and hold? It's money utilization, meaning when you buy and hold, if you bought 100 shares of SPY in 93 while it's up 36 grand, that's great. You can't do anything else with that money. It's tied up. With this strategy, I can trade, I can use that buying power to go trade the proven strategy I have on the 2-minute chart that you all see me trade every day on this channel. I can utilize that money to trade during market open, and then I can enter at close of day, sell those shares at the open of next day, use that money to trade, sell at end of day, buy at end of day, sell at market open the next day, use that money to trade. So that's something else that would help make this strategy more worth it and help this strategy outperform the buy and hold even more. I just wanted to touch on that quickly. I want to do one more thing with the strategy. We're up 52.7 right now, which once again, with the buy and hold strategy was up about 36 grand. So we're doing much better than the buy and hold, although be it we are paying short-term capital gains taxes, we're paying fees along the way, but this is without scaling. This is without, this is much better money utilization. I have access to this buying power every day. So there's pros and cons to both of these. I'm going to let you guys, as always, you kind of have to make your own decision about whether you think this is smart or not. I'm not going to tell you guys, obviously, you must go trade like this. Of course not. But I want to try one more thing. I want to try, what if, obviously, it's better to not buy when the SPY is below the 200 SMA. What if we implement shorting? What if when the S&P is under the 200 SMA, we short at close, cover at open? I'm going to go ahead and put that into the code now. Once again, not going to bore you. Jump to the results. Alrighty, so the results of that code, adding shorting close, covering open when SPY is below the 200 SMA. You can see it's now shorting and opening here. It's now up 72 grand. We are now up double the buy and hold strategy, which was up around 36 grand. And once again, that's with no scaling. That's without taking the profits you've made from this strategy and using it to upping the share size. That's without calculating any of the extra money utilization you get from this strategy. The fact that since I'm not just buying and holding, I get to use this buying power to actually trade SPY intraday every day. We are now double the buy and hold, and we have those other upsides, with the one, of course, major downside versus buy and hold is that we are paying yearly short-term capital gains taxes on these trades, and we're paying fees on these trades, which will be very small. It's one trade a day, and you're just paying SEC FINRA fees. So on 100 shares, it's about 90 cents a day. So don't be too scared of those. But still, I'm going to leave it up to you guys, and I want to hear your all's thoughts about it in the comment section down below. But I may start trading this. In this account, this is a day trading account for me anyway. I mean, imagine, let's take another step back. Imagine doing this in an IRA. Of course, you wouldn't be able to short. You can't short in IRAs. At least I'm pretty certain I can't in my Fidelity. Let me make sure I didn't lie to you. I'm pretty certain you can't short in IRAs because you can get limited margin, but you can't get access to full margin accounts in IRAs. So I don't believe you can short. Hopefully I'm not wrong with that. But imagine doing this in an IRA. You have the, all the upsides. What's the biggest downside of this is taxes. If you're in a Roth IRA, you're not paying any short-term capital gains taxes. So then that major downside of this goes out the window. So definitely something else to consider with this. But I'm going to let you all give me your thoughts on this in the comment section down below. But I think I may start trading this strategy. This is just a day trading account for me anyway. I'm paying all kinds of short-term capital gains taxes on all the money made in this account anyway. I may just, implement this. Give myself a little bit of added extra edge over the market while the markets are closed. I can make extra expected value while the markets aren't even open. And then of course I still have all my buying power back to trade the strategy that I always trade during market open. So I think I may implement this. I may go short SPY at the close of the day and obviously cover it open tomorrow. So maybe we've formulated a new edge for myself in the markets that you all will see more of coming down the future. So hopefully you enjoyed this video. Hopefully you enjoy the real back-tested code when we go over these kind of videos. It helps to paint the picture of when you do this every single time, what is the outcome. And you know, we also made the strategy better by implementing the 200 SMA, entering not longing below the 200 SMA and shorting below the 200 SMA. So now it's not just buy, close, sell, open. It's buy, close, sell, open with this one simple caveat that doubled the profit since 93, which is amazing. So once again, if you enjoyed the video, please hit the like button. It does help. If you're new around here, why not subscribe? It's free. With that being said, I'm going to go ahead and sign out of this video. I will catch you all in the next one.